by Mike Hutchinson and Ms. Courtney Cowgill. Mike Hutchinson is a public CPA at the firm Deloitte & Touche, and Ms. Cowgill is in industry at BGCH Holdings Incorporated. Please join me in welcoming Mr. Hutchinson and Ms. Cowgill.
I think I can project in this room okay, yes? All right, good. I have practice at yelling, but not in my current job. I'm actually a graduate from Metropolitan State College. I am a licensed and active CPA, and I am Vice President of the Colorado State Board of Accountants, which is probably why Ron picked me for here. Although you have in this very room another state board member with me, Dr. Turner. First of all, I want to say that's a hard act to follow. He was kind of a genius, don't you think?
Pretty good.
He also taught me that Mary Poppins is right. A spoonful of sugar does make the medicine go down. And I don't know if you guys realize how many messages upon messages were in his words. It's more than just live within your means. There was a lot, and I'm going to touch on a few of them today, which is going to be a very brief presentation. The first thing I want to say to him, and remember this because I want to come back to the PM, almost without exception, every ethical dilemma you will run into in your professional career, and I don't care if you're in accounting or you're an engineer, will be because of fame or fortune or the desire to be liked. Remember that. The second thing to remember out of today, if you get anything else, your own ethical lines and who you are is what you are. What you learn as you go through life is how to deal with those situations in a rational, logical, non-emotional manner. But you remember when he said that if you hang around with liars, you start to lie. It's true. What you have to learn early in your career, and there won't be a lot of people out there to help you once you walk out of here, is when to stop and say no. Now, today's about ethics, and the first premise I'm going to throw you is that actually capitalism will not work without ethics. Odd concept, isn't it? You thought I was going to talk about CPAs and ethics, and I am. But I will tell you right now that ethics is really the foundation corner of capitalism. When you do a transaction with me, and I screw you over, how are you going to feel about it? Not good. How many people in here have actually walked out of a business situation, you bought something, and you feel like you got screwed? Yeah. Now what are you going to do? Are you going to go back? Are you going to make that same mistake twice? Are you going to do business with that person again? The answer is probably not, unless you walk in with a lot more research and a lot more expertise on your side if you're dealing with that person again. That's why the professions came into being. I don't care if it's law or medicine, engineering, IT, accounting. It's because you can't be perfect in everything, and you have to have experts with you to help you make the right business transactions. Otherwise, nothing would ever get done. We'd all be locked in analysis paralysis. Make sense? So when you go into these situations, you need to have those people with you. But then how do you choose who they are? And how do you know that those people are going to be acting with your best interest in mind? That's where the ethics comes in. You're actually hiring a professional of any profession, and you're believing that they're going to have your best interest at heart. You're believing that those people are going to be good enough to give you the expertise and the advice that you need. And if they don't, then you've been screwed. Now when you go into the professions, and I'm going to say without exception at this point, we all have ethical standards. In accounting it's very high, Because we're dealing with money. That fortune part, money is important. But it's important in medicine, it's important in law, it's important in engineering, it's important in IT. If you don't have that ethical standard of that profession, you're not going to know if the person who's advising you is good or bad, or willing to take your best interests at heart. That's why we have professional standards. Just going to the CPA profession, which is the one I'm most familiar with, although I do have a master's in engineering, for some God unknown reason. We have very high ethical standards. To sit for my exam, I had to take an ethics test. Every 2 years, I'm required to do ethics training. And I will tell you that even that did not prepare me for the first ethical issues that hit me the moment I walked out of the door and into public accounting, nor the ethical issues that hit me in my job today as the chief financial officer for a publicly held company. Ethically, who am I responsible to? My boss? Yeah. My audit committee? Yes. The investor who buys my stock? Absolutely. These are the issues that you're going to have to realize exist and exist on a daily basis. Learn what your line is and learn not to cross it. And learn how to deal with those ethical situations. Get those skills. Get that training so that you know how to deal with it in a way that doesn't terminate your career or somebody else's. And so that you don't start hanging around all day long with life. It's a huge issue. As part of my job on the State Board of Accountancy, which is, by the way, a volunteer position, I'm not doing it much for fame, and there's certainly no fortune in it. It's discipline. It's disciplining CPAs who violate those ethical standards. Remember that when you hire a professional, you're hiring them to give you good advice. You're hiring them to have their represent you in the best possible manner. Not with their interest in mind, but with yours. The CPAs that cross our desk are CPAs who somebody has felt they have crossed that line. And it's our job when we do that to help agree or disagree. And I can talk briefly about some of those cases that cross our desk, but let's just go to the biggies. Because eventually, when an ethics situation got crossed, somebody lost. A lot of people lost big in Enron. Financial statement fraud. But doesn't the little guy get hurt when your tax return is done wrong and you don't pay the feds? Or you go in and you have the IRS audit you and say fraud because the CPA sitting next to you was not in your best interest? Or the situations where you, in your company, have the ability to either misrepresent data or steal from that company? I am a fraud examiner. I have my CFE license. And I can't tell you how many situations where I've walked into companies as the controller, the CFO, and actual theft. That's the kind of cases that we judge. A lot of them are not very big or important, and some of them are. But there are cases where people, like any one of us in this room, lost something because there was not an ethics situation there. And so I come back to you again full circle, and Mike's going to give you more examples because in public he probably sees it. I can give you real examples, two examples of audit fraud where people were damaged. Some of those are crossing our desk. I can give you examples of asset theft. I'm not talking about a pencil. I'm talking about the accountant who steals money through accounts payable or fake employees in payroll. But who's really hurt ultimately at the end? It's the people like you and I sitting in this room who hurt at that point. So ethics is not just with you, it's with all of us. And you have to know and understand your ethical why. So remember, when you're confronted with an ethical situation, the first question you ask, is it fame? Is it fortune? Or is it the desire to be honest? And before I turn this over to Mike, I'm going to leave you with the saying. Reputation is what other people think they know about you. Honor is what you know about yourself. And it's the one thing nobody can take away from you.
What's that? Good luck. Okay, following that. Yeah, all right. Well, I do a lot of stupid things at times, and this may be one of those. But Corey's presentation and this presentation were awesome. Between my wife and I, we probably average 14 a day. Some of you may not have heard the earlier presentation, but basically, and I'm not going to tell you who's higher, who's low, but you know, laugh, have fun throughout the day. And Corey Cacchetti was talking about a number of things from a virtue perspective, and he suggested that every day we laugh. And I really believe in that, and it certainly lightens my spirit. If you're smiling because she heard the fart joke. So, with that, I'll talk about a few things. I've just got a few slides from Deloitte, and then Chris Willing, I'll play a little bit of a video from Deloitte's archive videos on ethics and integrity. Yeah, it's got a few questions in it, just to give you an example of the sorts of things that we deal with. This is integrity. We talked about integrity. The previous presenter talked about integrity. And what do you think is one of the more or most valuable assets that Deloitte & Touche has? You know, name any company. But what do you think it is, Keith?
Your name.
Yeah, name, reputation, and that sort of thing.
Your people.
Certainly people. Yeah, you know, there's sort of one last thing that we talk about within the firm, but you know, it's our name, it's our reputation, and then we've got people and clients. We got clients and people. You know, we got computers, we got desks and stuff like that. But all we have is clients and people and our name. I'll take it back to connect this a little bit to the Arthur Andersen situation. Good firm, many, many years, and there's going to be books written, and there's a lot of analysis that can be had, and the New York Times and other bits of press will villainize Arthur Andersen, they'll villainize Enron, et cetera, et cetera. I'm not disagreeing with that, but there's a lot more to it than you can put in a column this long. I was in the marketplace in late '01 and throughout '02 chasing a whole bunch of new work, a whole bunch of new audit clients, because Andersen's reputation had been tarnished. And it was like it was yesterday. I can just tell you, I was in Houston, Texas, working on the proposal for frontier exploration. They were actually looking at Deloitte to come in and do their internal audit work. This is the spring of '02. And this is, you know, Enron's, you know, late '01, waste management, et cetera, et cetera. And then Andersen's reputation becomes tarnished by the concept of shredding documents. That's what killed Andersen, was shredding documents, and reputation loss that affected that. And man, I'll tell you what, the cards started falling just like this, and it was one client after another. Oh crud, I don't want to be the last one of Andersen's clients because the firm is collapsing. And so, you know, it wasn't litigation at that point in time, it wasn't settlements of litigation, and so on and so forth. It was the lost reputation. And man, when you talk about one of the big 5 accounting firms going out of business in 3 months' time, it's not because of litigation, which takes years, it's because they lost their reputation. So, Deloitte, integrity, you know, it was probably a wake-up call in many respects. I would tell you that I believe that the major accounting firms, and I want to get it back around to corporate America, because corporate America gets villainized far too often in my view as well. But there's no doubt that we got a bit of a wake-up call, and I'll just tell you the fraud and ethics and integrity programs and so on and so forth, even at Deloitte, are much more noticeable, far more prevalent in our day-to-day training and periodic training post Enron, post Anderson than they were before. Okay, I think we've had a great reputation for a long time, and we certainly intend to keep that. So that's really sort of a backdrop to that. I listened to Corey. It's a great presentation, and it really, I begin to think about it, and where does this stuff come from? He talked about driving in the slow lane to practice patience on the highway, and actually that's probably a good exercise. But I think, and I'm getting really philosophical, man, this stuff starts at home. And I hope everybody in this room has been fortunate enough to have a good home life, and you plant the seeds of ethical behavior and integrity and knowing the difference between right and wrong. This post-Enron situation, Deloitte, I carry a pen, it's in my briefcase. You click on it and it says, "What would Mom say?" It's got 3 or 4 or 5 different little things, What would Mom say about this? What would Mom say about that? It's not a bad barometer, frankly. For me, gosh, I don't want my mom thinking I'm doing something bad. So it's really the difference between right and wrong. With that, let me just flip through a couple of slides, if this works for me. I'm not a real technological guy. I want to talk just briefly about what it really means to our clients. I mentioned Anderson, I mentioned the Enron situation, but it's really important to our clients. What are our expectations and responsibilities, factors promoting ethical behavior, and then I'll make a few other comments. Nick Tomasino, the chairman and CEO of Deloitte & Touche LLP, I'll let you read this, but acting with integrity is key to sustaining the public trust and central to the work that we perform on a daily basis. We strive to conduct business honorably, ethically, and in compliance with all laws, standards, and regulations. You'd expect that of any and every company in America to promote that sort of a thing. But at least it's out there, it's on our intranet site, and we try to make each other think about it. But to the earlier presentation, little notes on our desk don't make us do these things. We have to strive to be better at all times. Pretty simple, but the president of Sun Microsystems said, "Your integrity matters to us, and you got a wonderful brand." I'll tell you, in the 90s, Arthur Andersen had a fantastic brand. I mean, it was Andersen. They were a tough competitor. What people, didn't really associate, but it's a big firm. They had a huge consulting practice and a decent-sized audit and tax practice, but they lost their brand. They lost their brand. They lost their name. They lost their reputation, and the rest is history. A lot of good people. A lot of very good people. It's really everybody's responsibility. I'm repeating much of what's been said this morning, but conduct yourself with integrity and character at all times. The word character has been used in a number of situations this morning. I think we all kind of know what character is. It's, do you do the right thing all the time? Do you strive to do the right thing all the time? You were talking a little bit ago about transactions, and you've gotten screwed by some vendor or something. I will tell you that sort of our motto is clients and people, people and clients. If you don't treat your clients and your people fairly, you're not going to have them very long. And that's just simple, it's simple for anybody and everybody to say that and understand that. But if you don't do it day in and day out, you're going to lose your people and you're going to lose your clients. Let me take that second to talk a little bit about corporate America and the press, and heck, the president drives me nuts to a degree. Criticizes corporate America day in and day out. And I will tell you, in my almost 31 years in public accounting, now you might say, well, I'm in the crowd, but I have found very few corporate executives
that didn't try to do the right thing every day, didn't try to innovate, didn't try to create, didn't try to develop things, didn't try to compete, didn't try to win. But I felt like a high 90% of the time, the corporate executives that I've interacted with were doing the right thing, had a great deal of integrity and a lot of character. That's not to say that there aren't bad apples in the egg or in the basket, but I take the opportunity when I can to tell you that I believe the vast majority of corporate America has high ethical standards, deals with integrity, and has character. You know, this is presented to the Deloitte folks, but our client service professionals represent our culture to our clients and in the marketplace. You know, we've got to work with our team members to resolve ethical dilemmas. I have had situations, and it's not infrequent. I mean, it's regular that you'll come across situations that, you know, aren't you know, ethical and acting with integrity are not always that obvious. But it's almost every day that you're dealing with something that you can think about. Is this the best situation? Is this the right direction? Is this the right answer for me, for our firm, for our customer, and for the community at large? And just continue to ask yourself and think about those things as you go through day-to-day life. You know, from within Deloitte, reach out for help, and that's true anywhere. I'll get to a few slides here in a second, but it's not always black and white. It's not always obvious. And you know, talk to people, get counsel on situations. The worst thing you can do if you've got uncertainty about a situation is to ignore it, to look the other way, and so on and so forth. There's lots of people that maybe have helped, have interacted, have more experience, might be able to provide insight to you, so reach out for help. One of the top factors promoting an ethical workplace environment, this is a study that was done by a survey conducted by Deloitte and Harris Interactive, but a lot of people say that 42% is the behavior of management, which is not shocking. It might even be more than that, but how does management lead? What sort of an example do they set? Direct supervisors, and certainly positive reinforcement for ethical behavior. When you've done something right, when you could have done something different, are you recognized for having, you know, that's the positive reinforcement, the sugar that was previously mentioned. So that's a good practice in business, it's a good practice in day-to-day activities. You know, I talked about survey respondents indicated they'd likely seek advice regarding an ethical dilemma from we talk to our friends. That really is a good example. But talk to our peers. You know, there's discussion about friends and real friends and that sort of thing. But you get a lot of good advice by talking to people that you care about and respect. Supervisors, partners, and managers. You know, most companies today have an integrity hotline of some sort. Deloitte, we call it Dr. Dilemma. You can text it in, you can phone it in, whatever method of communication you want. But certainly we've got that. Human resources is the age-old group that we'd go to with dilemmas. And then you know, really need to report violations of code or policy and just bad things that you see happen. And you know, you really have some responsibility to do that. This is sort of the same sort of thing. Who'd you reach out to? What sort of presentations and that sort of thing are you seeing? This is more internally focused at Deloitte, but you know, they're seeing 1 to 3 times topics about ethics and compliance. So we could probably do a better job than that. This then is talking to our management group about being available to your teams. You got to we call it living in the field. Don't sit in your desk at the office, but get out, be interactive on a day in and day out basis to help people deal not only with serving clients, but if there are situations to be considered from an ethical or fraud standpoint, we certainly need to be visible as role models and help teams assess that. You know, I guess somewhat in summary, it's not about laws and compliance, code of conduct, helplines, and compliance officers. It's really about moral courage and walking the talk. leading by example, doing the right thing, reaching out for help, reporting the sorts of things that you might see. So anyhow, that's kind of the presentation I have at this point in time. Let me see if I can pull up this little video. That might be a challenge for a guy like me. So far, so good. There's Ask Dr. Dilemma. Tracy Krause is trying to get hold of me. Maybe.
Right click and then you go.
What's that?
Right click on it. And go up to where it says open. The top. There you go. That's what.
Maybe.
Sure it's not already got it.
That's all right. It was. It's a short 2-minute deal. Let's just skip it. You know, with that, I think maybe as best would be just Q&A and questions that might arise. Let's just start with you in front.
So for both of you, he's kind of saying that, you know, I can give you examples of, you know, theft and fraud, and I can give you examples. Can you give us some of them? And not necessarily the really big ones, because a lot of us are going to know, you know, a client says, can you mix numbers? We know that's wrong. But more the ones that you have to kind of go in between yourself.
Let me give you an ethical situation that happened to me last week. I am the CFO of a public company, as I told you. And I had a situation where we found a material, what I consider to be financial statement misrepresentation in our 2007 financial numbers. It was $1.5 million on a $5.5 million net income. Is that material? It was arguable. First thing I did was I called my auditors. And I said, I think I have a Sarbanes-Oxley 404 issue. And my audit partner wasn't very happy with me. I said, there's a material mistake in last year's financial statements. I think you know about it. I just found out about it. By the way, I've worked for my company for exactly 7 months, 16 days, and about 4.5 hours. And I said, I think you need to go to your audit partners and you need to talk about this, because you and I are going to have to make a decision about whether we're going to go to the Securities and Exchange Commission and tell my investors that the financial statements for 12/31/07 and all the financial statements I have issued since then are unreliable. Stop for a moment and think about what that does to my investors. I just told them that they relied on numbers. They spent millions of dollars on stock on unreliable numbers. Ethics situation. I called my audit team. I said, I've got a problem. And I expect you guys to be here in the next hour because we have a decision to make. Mind you, this was 3 days before my 10K was due to the Securities and Exchange Commission. That's an ethical situation. There was a pinch.
What was the outcome of that?
The outcome of that was that I talked to my audit committee. My audit partner came and joined me. We sat at the table with the board of directors and told them we felt that we had a material weakness according to Sarbanes. It was in the best interest of the company and the best interest of the investors to release that information. I got on the phone, called the Securities and Exchange Commission because we had just finished up with an SEC comment letter, and the SEC said, fine, here's what you're going to do about that. And we issued a press release by close of business that day. And it was ugly. I have on average right now 22 voicemails a day from my investors wanting to know what the frick of being polite is going on. That's an ethical situation. Now, could I have brushed that under the carpet? Yes, because it certainly wasn't material to this year's financial statements. But it was material to last year. And I had an investor come in and done an audit. Had the SEC come in and done another audit, that's fabulous. Had the SEC been in to do an audit, not just a comment letter, it would have been visible. Then there's more on the line than just my own personal definition of honest. I am reissuing financial statements for 2007 today. I'm going back to the office this afternoon to sign on them personally. That's ethical. And that's a very difficult decision. And I sat in my office and I did this for about 30 minutes before I called the audit. Another situation, this happens all the time. You're sitting with your boss and he says, you know, we gave 40 cents per share guidance this month. We're at 37. Find it. Now, accounting is very much like law. Do it to can be whatever number you want. Give me a few minutes to work on it. It's a hard thing to say. I'm laying it on the line there. So you have to decide, as the accountant, as the CFO, if you're found a mistake, if you found an item booked this quarter that should be next quarter, or if in reality, by God, the company did 37 cents. That's a daily ethical situation. Ethical situation, then I'm going to turn it over to you because I'm sure you've got some. I was out bidding liability and directors and officers insurance for my company. I had been with my company for 4 months. It's $1 million bill for us. That's material, wouldn't you say? The guy on the insurance account, the man who had our account for a long time, gave myself, the CEO, and the company president a $100 gift certificate for Christmas. Now, $100 in relation to $1 million account is really nothing, is it? I walked into my CEO, and I walked into the person who was also responsible for contracts, our UPA, and I said, we need to return these. And they said, they've been doing it for years, and I said, you need to return these. I don't want you, as a competitor, to think that I gave him my business because of $100. And I called the insurance guy up and I said, this may be industry practice, but it isn't appropriate at a time when you're bidding for my business. And that's the dilemma. Much easier, by the way, than calling the audit committee and telling them I have a 404 week. Your turn.
Well, these things aren't obvious, right? I'll give you an example and then we'll talk a little bit about that example. But we're going through year-end evaluation processes for all of our people right now, partners to first years. And you know, we're really pushing. Deloitte has most companies do, but has a 5-point scale, you know, 1 being the best and 5 being the worst from an annual performance perspective. And you might expect an equal distribution around 3, if you will. 3 being you're meeting expectations, everything's going well, you're doing fine. What we found over time is that the average score in our evaluation process has become 2.2, 2.3, 2.4 or something. If you think about our 5-point scale and you got a 3 evaluation being meeting expectations, you're doing exactly what we think you ought to be doing. 4 is meeting some expectations. Okay, not all, some. 5 is, you know, not that great, all right, from a performance perspective. And then take it the other way in 2 and 1. You know, it comes down to equity and fairness and allocation. If you tell somebody they're exceeding expectations when they're really meeting expectations, that's kind of dishonest. You know, that's not right. It's not right. And so, but it's hard because you're evaluating great people, you know, good, hardworking, giving it their all, and human nature is let's move up the scale. So, you know, it's called grade inflation, whatever the case may be. What we need to do is we need to get back to where 3 is a good rating, and the receiver appreciates that, and the giver appreciates that, And then we can use the spectrum of our 5-point scale. So it becomes, when you're doing an engagement evaluation of, assistant A, it becomes an ethical dilemma in terms of, do I deliver the right message, which is harder than to deliver the sugar-coated message. So that's kind of a simple example. You go through a number of other things. I'll talk about the $100 deal to gain the business. I mean, where do you kind of draw that line? You have to use your own judgment, in my view. I don't know if $100 is going to swing the vote on somebody, but historically, and this is changing directionally, but there's a lot of business done, so to speak, over lunch. When I take a prospect to lunch, I'm going to buy them lunch. That's the provider versus the client. I don't play much golf anymore, but I used to play golf, and you do that with clients now. Independence in appearance and fact is critical in the audit business. And you not only have to be independent in fact, but you have to be independent in appearance. So I will tell you that business practices have changed to some degree, and maybe to a large degree in terms of things that may not have impaired independence in fact, but certainly might have impaired independence in appearance. And so those become ethical dilemmas that you deal with in terms of taking somebody to lunch. The people I take to lunch once in a while that I know I can't buy their lunch are the examiners from the SEC. So that's pretty obvious. But I have a buddy that used to work at Deloitte, that's at the group in Denver, and we get together to talk about the Mile High Down Syndrome Association. He won't let me buy lunch, but he can, because that would be bad. So those are just kind of examples. You think about business transactions, but it's people transactions too. So it's everything. It used to be hard when I was young, newly married, had no kids, and this is I just started in the late 70s. But you get to 5 o'clock, and as Beth, you can remember some of this with the folks. Some people go out for a beer after work. So, because I want to, not you, but we go for a beer for an hour and go home. And, my wife, today she just said I go for a beer, but then she just said I came home. And so, had that decision once a month or something like that. So anyhow, it can be as little as that. And I'm not going to say that going for a beer once in a while is wrong. But, you got to draw the line, and it has to become what's right for you and right for your situation. So it can be as little as that. Okay, any other questions? Yes.
When I will be interviewed, I know that you're looking for ethics in me, and I would be looking for ethics in the employer.
Sure.
Is there any questions that I should be asking the employer, or is there any telltale signs?
Well, let me give you my reaction. I mean, you could ask me, am I ethical? And you're going to get this all the time. It's actions speak louder than words. And so you've got to experience it. You've got to recognize. You've got to transactions. I call them transactions. My wife says that, but it's just day-to-day transactions in terms of conversation, in terms of what you do. You can read the paper. What did this firm do? What did that firm do? What did this business do? So I can show you a whole bunch of websites on Deloitte about ethics and fraud and Dr. Dilemma and so on and so forth. It's being pushed out to us in the firm. So we're recognizing that, but that doesn't make somebody ethical. And so it's a hard one. You're just going to have to observe and draw judgment.
May I add on to that? When you go out and you start to work for companies, you really need to think about your personality, your standards, your viewpoint, your morality, your philosophy in relation to what that company is. You can find out that by networking meeting. Yes, go do a search on them. Have they been in the press for hiring? I once was internal audit manager for a home builder, and the president of the company ran a hooker through his expense report. And I said, no, you're the president of the company, but this is not appropriate behavior. Now, I got taken out of the lot, but we won't go there. The point of it is there are ways to check out the companies you're looking for. And one of the ways is, first of all, is look through your network. If you're not a member of LinkedIn, go in and talk to people who are employees there. I used to work for TCI for years, I'll tell you. I never told TCI I was a CPA. Never. That was the ethical climb at TCI. It was good for engineering, though. Use your network, talk to your people, talk to people who are there, read the press. That will help you decide whether their ethical standards meet yours.
Great.
Could you share maybe a couple ethical situations that somebody that's a new auditor might face?
Well, yeah, I'll give you one. Deloitte's a business. We're in business to make money, but we're clearly in business to, from an audit perspective, provide an independent viewpoint with respect to financial statements that investors are relying on, et cetera, et cetera. Now, I started as a business, though, and in any business, you've got a revenue stream, you've got a cost stream, and you hope to have some gap in between the two, right? And so a first-year staff person could be on an engagement with an ill-informed senior accountant who's leading the field work, and make it simple, I want you to do the cash work, and I think that'll take you 8 hours to do it. Well, maybe it's really 16 hours worth of work that needs to be done. And that senior accountant could apply undue pressure, and I'll say undue pressure, because I don't have a lot of problem with some degree of pressure to motivate and to exercise. But if it's undue, if it's inappropriate, to the point where that individual might conclude that it took them 12 hours to do it, but they charged 8, that's wrong. That could happen, that does happen on occasion, and when we recognize that, it's not, there's a whole lot more pressure from that point forward put on the senior accountant than the first year accountant, because that's leadership and that's bad leadership.
It doesn't work.
Jumped out at me.
I can give you some examples of where independence is critical. How many of you guys are accounting majors versus business majors? Okay. Independence, for those who are not accounting majors, means that you're separate in concept as well as fact from the client or the work that you are doing. It means that I can make a decision that's not swayed. But what sways you can be things such as friendship. It can be things as the desire to be liked. So I was on an audit once where the CFO and I were really good friends. I had known this person for a long time. I had brought the client in at Ernst & Young because of the fact that the CFO was a good friend of mine. And of course, bringing the client in, the first thing I did was get assigned to the audit. Well, I got in there, we did the audit, and all of a sudden we realized that the numbers weren't quite what they thought they were, that they were perhaps stretching them. Now I had a dilemma to sit down and say to the CFO, you're my friend, I can put this on the waived HAE list. Depending on what I put on the waived HAE list, 2 and 2 can be 4 or 10. That's an ethical dilemma. As an auditor, Ernst had a rule that said that if you, as a junior, put a work paper in that audit folder, by God, a partner couldn't remove it. Now, a partner could calculate removing it, but if you had an opinion that was different than what the firm's official opinion was, it was still in that work paper. That's an ethical situation, because there are times as a junior, you're going to have to come in and say, this doesn't feel right. I'm really naive, I'm really young, I haven't been around for a while, but it doesn't feel right. I walked in one time when this is my very first ethical dilemma. I walked into my audit partner, who was a grizzled old guy of about 65, and by the way, he was chair of the State Board of Accountancy. And I said, I think something's going on with this client. And he said, we've been doing this client for 20 years. What do you think you know? You're a junior, for God's sake. And I said, I'm reading letters from clients, from little old ladies, which is a church, who have sent this church money. on the grounds that they were going to be able to live in a retirement home. And I'm seeing letters from these little old ladies that said, I need my money back, my husband's dead. But I didn't see anything on the books that talked about a liability. I didn't see anything being worked on about building the retirement community for these old parishioners. And I went to the audit partner and said that. And you know what, to his credit, he came out. I mean, he's talking to a junior. I don't know how often he talks to juniors.
David.
David. This is a good man, worked for him. And he came out and I said, this is what I'm seeing. And they brought in people who were much stronger than I am. And it was a fraud situation. There was a situation where they were taking money from parishioners and saying, we're going to take your $1 million and you will get to live in a retirement community. And we will take care of you the moment you move in all the way up to the nursing home. By the way, we want your money first so we can invest in the product. Very well known fraud case in Denver, actually. That you would know that it's right when you started.
My career. Bernie Madoff.
Yeah.
Somebody did something wrong. My view, he's got a two-person CPA company. That's probably, there's probably, there's an independence issue, would be my guess. Madoff represented 160% of the president. That's hard to do.
Well, I want to thank Mike and Courtney for being here.